Well, back when we started writing the report in 2011, tech was more of an idea and a buzz that we were hearing across a couple of markets. It wasn't this big movement that we were seeing across the country. And we decided to go with that, and what we started with were 18 markets, and they were some of the well-known markets that you know, like San Francisco, Silicon Valley, New York, Seattle and Austin. We picked up some secondary markets that were starting to see a little bit of activity, and they were having some leasing activity and some growth. And where we're at today, 5 years later now in 2015, tech has permeated all markets, and we now have 37 markets in our report. They're all reporting activity. From small startup activity to bigger corporate office relocations and expansions and satellite offices from the brand name companies that you know very well. And that's just a trend that we continue to see. And in fact, the leasing activity that we've recorded the past 4 quarters for large block companies, 75% of that has represented some sort of growth across markets, and it's just a testament to the pervasive nature of the technology industry, not only within the tech sector, but within traditional bricks and mortar and professional business services and financial services as well.
This year we wanted to develop a model that would provide some insight for tech startups as to where the next opportunities are for growth. So which cities, what are the top tech cities that a startup can look into in order to grow their business, to develop their talent pool. And San Francisco and Silicon Valley and New York City are obviously still really strong startup markets. However, they're also very expensive, and they're becoming increasingly unaffordable for some of these growing younger startups. So what we did is we looked at some of the more important factors for startups: access to capital, a deep talent pool, highly educated workforce, and then cross those with some of the factors that are a little bit more sensitive to a growing company. So the cost of office real estate, the cost of residential real estate, and also the cost of talent. And looking at 37 markets this year and crossing those important factors, we developed a Tech Locator Matrix. And so this year in the report, we're actually providing some insight and some recommendations for young startups that are looking to grow their business. The feature that I think is probably most unique is the top right quadrant. This is the low cost but high startup opportunity quadrant in the matrix. Some of the markets that we've identified this year that are in that top right quadrant include places like Seattle, the East Bay, Nashville, which was a little bit of a surprise, but it does have a really strong talent pool, and then Las Vegas, which has seen a lot of startup growth over the last few years. So these are markets where the costs are relatively under control, but the startup amenability factors are pretty high and increasing, and this is the kind of place where a startup can really succeed and grow their business.